only for first-time home buyers.
Okay.
So clients can apply up to 110%, right?
Ooh.
So each bank will look at the client's credit profile and affordability and offer an extra towards paying your attorney fees.
Oh.
So for a first-time home buyer who does not have
the capital on
the capital to actually pay the attorney fees, they can utilize that.
Do we have first-time home buyers in the studio today? Future home buyers.
So did
you hear that, guys?
You hear it.
That's an amazing offer. I think it gives first-time home buyers an opportunity to actually buy, because not everybody comes with a stash of money waiting in the bank, to pay attorneys and to pay this person and that person, etc. So to actually include it then gives you an opportunity to pay it over a certain period of time, and it allows you still to have that home.
Because you can imagine if you got your 50% discount, then you've got your extra 10%.
Hey, Red Circle family. Welcome back to Brick by Brick, your property power purpose podcast right here on Red Circle Television. I'm Dudu, your executive host. And if you're joining us for the first time, this is our Home Buyers series, where we are taking you through everything you need to know about buying and investing in property in South Africa. Today's episode is a big one. We are going to be breaking down the different types of home loans that exist in South Africa. And of course, I'm not here by myself. I am joined by my lovely co-host, Jandre. Hey, Jandre.
Hey, Dudu. How's it going?
I'm good, thank you. And today we've brought a beautiful, gorgeous guest, also from GreenDoor Home Loans, Debatso. Hi.
Hello, Jandre. Hello, Dudu.
Hi,
it's great to be here.
Welcome.
Thank you.
Debatso is a property finance specialist at GreenDoor Home Loans. And I think this is going to be a very, very important episode for everybody that wants to know a little bit more about the finance side of things, right?
That's it, yeah. If you're overwhelmed by all the different home loan offerings, we've got you, right? We've got Debatso who's going to be giving us some intel into the different offerings from the banks, because there are so many.
Yes, they are. And this is going to be specifically for, anybody that is a home buyer or an investor.
Yes.
And we're going to make sure that you get to understand which one will suit you best, either as a home buyer or an investor.
That's
right.
correct.
Okay, fantastic. Debatso, welcome. Tell us a little bit about yourself, Debatso.
There's not much.
Sure.
But like you said, my name is Debatso Mpela, and I work at GreenDoor Home Loan as a property finance consultant. And my daily life is all about helping clients achieve their goals, get the money to pay the sellers.
Yeah.
So I'm the go-to girl for your finance.
Amazing. I love that. So there are, I'm sure, many options, right? And how then would we know which one suits the specific buyer or the specific investor?
All right. I think we need to establish the fact that there is no one size fits all.
Sure.
When it comes to property finance, because the banks will look at each individual or each client based on their credit rating, based on their affordability and the product that they're looking for. Remember, we have people that are buying for residential. You've got ones that are buying for the investment, which is also, they look at your commercial, right? So with that, you've got individuals. You've got people that are buying as groups. You've got people who are using legal entities such as your PTYs and your trust. So each client will be treated based on how the banks would actually look at them. So there's no one size fit all.
Okay,
Yeah.
Fantastic. So it sort of suits the circumstance of the actual client.
Exactly.
Their individual circumstance. Yeah.
Like I said,
fantastic.
The main thing, they would look at their credit profile and the affordability, whether you're buying as an individual, you're buying as a group. That would also help them to determine the kind of interest rate they'll actually offer to you.
Oh, okay. All right, fantastic. And before we continue, guys, make sure that you're subscribed to our channel and you hit that notification bell so that you do not miss a single episode from this series. And
of course, remember to follow us on our social media, right?
Yeah.
Red Circle Properties and GreenDoor Home Loans.
Definitely. And all the links will be in the description box down below. So make sure that you click on those links, follow us, and stay with us on this series. Okay, Diabato, back to the interest rates. Tell us a little bit more about that, right? Because I'm sure that there are sort of different offerings based on whether the repo rate is at a certain number or the interest rate as well. So tell us a little bit more on the differences. Break that down for us, please.
Okay. So when it comes to the interest rate, what happens is based on the client's profile, they'll be given a certain interest rate. Either it will be less prime or plus prime. So what that means is based on your credit profile, the banks might decide to offer you lesser than what the current interest rate is, or give you more based on how they've actually viewed your profile. So initially, when you get your quotation from the bank, you'll be getting a variable interest rate, meaning that whenever the interest rate goes up, you will feel it.
Yeah,
if it goes down, then you will also enjoy it, right? But then the client has an option to then, when the property is then registered, to go to the bank and get it fixed. Yeah.
Okay. So is there an option to change it from variable to fixed?
Yeah. Only after your property has been registered.
I see.
So initially, when you apply and you get your approval, you'll be getting a variable interest rate. So that will also go along until it hasn't been registered. That means you'll feel it.
Right.
If it goes up,
you're
going to feel it. Goes down, then you're enjoying the benefits.
Okay.
Also.
All right. So then what would you then suggest to a first-time home buyer? Perhaps they're not entirely sure whether they should take a fixed or variable rate. Are there perhaps options for that particular client as well?
I would definitely say it depends on your needs first, and it depends on what a lot of people would say. I'd rather follow a certain budget, meaning that you know that you are paying a certain amount each and every month, then you're not actually uncertain if that would change or, that would increase or decrease, even if it's fixed, it will be looked at after 2 to 3 years. But then you know that you are working on a budget if it's fixed, right? Also, if it's variable, it still works out for you. Like I say, if it goes down, you're enjoying the benefits, right? It's only when it goes up that, we all feel it. But then other than that, it just depends on your needs and what your actual goals are.
Right. I remember when I was a first-time buyer, that was one of the things that I think were a little bit confusing to me.
Yes.
Because I don't think it's really something that you get to understand until such time that you decide to invest in property. So my first home loan, I remember I took a fixed rate on that one. Yeah, fixed. It was a personal home, so meaning I was staying in the home. So I wasn't planning to sell it anytime soon. I decided that perhaps a fixed rate will work best for me. Also, as a first-time home buyer, I felt that it made a little bit more sense according to what I was also being able to afford at that time. Yes. Then COVID hit, right? We came to COVID, and a lot of people who had variable rates, I think, benefited more.
Yeah.
Yes. I didn't, unfortunately.
Stayed because it went down.
Stayed the same, and I was looking at it and I was following through and I was just like, wow, where I would be right now? If only. But then after COVID, things also changed.
Yeah.
Things also changed.
That's correct.
Interest rates started going up.
Yes.
The economy was just in shambles, essentially. And I felt at that moment that I was actually benefiting from having a fixed rate.
Yes.
Yeah. And maybe I should also mention the fact that there are banks that would allow you or give you an option for what they call a step-by-step payment.
I see.
So what happens is you start at lower amount for a certain period of time, maybe be it 4 to 5 years. Then after that, it will go to the actual repayment that it was supposed to be. So that actually give you time to actually plan and budget, probably use the money that you could have used to repay your bond for your furniture and other stuff that you'd want to do.
Okay, that sounds nice. I love that the banks can give you options sometimes. And I think maybe sometimes we need to be a little bit more or get a little bit closer to the bank so that you can get to really understand what it is that they offer for you, and you can take advantage of some of those offerings as well, I think. Most people, I think, would rather stay away from the banks because it's either they're chasing after you for something or you've missed a payment here or there. But in fact, if we are to maybe change our mind on the relationship that we should have with our banks, then it would benefit us a little bit more.
That's it. The banks want to help the client to get that property, even though it is a bit intimidating approaching the banks, but that's why we're here, right? We deal with them on a daily basis. We have personal relationships with RCs at the banks that we communicate with daily. So we take the scary part out of finding a bond. And that's why there are so many different products, right? Because they've noticed that it's not a one size fits all. So many people have different circumstances and different reasons for buying. So yes, that's why we deal with it. And the interest rate as well, as scary as it is, I wanted to throw that in there. It seems to be stabilizing at the moment. So we're very happy for that. I mean, that's a great time now for people to be looking to purchase, especially for first time home buyers. And, of course, that's another reason why we're here is to negotiate and motivate with the banks on your behalf, right? To get you the best rate so that we can make sure if you choose fixed or variable, you've got the best payment option at that point. Yes.
Because I wanted to add that the part where you're saying they need to get closer to the banks, they don't even need to do that because as an individual, you can't be going to this bank, then that bank. So we make sure that you save your time. Just give us one application form, the documents that we need, and then we do all the job for you.
Fantastic. So are you also there to be able to provide advice? For instance, if the buyer wants to now switch from, variable or fixed, or once that is done, you guys are out of their lives completely, or can they still come back to you?
They do. They always do. I think.
Oh, that's so wonderful. I
think it actually becomes a very good relationship.
Okay.
Because even after that, I mean, especially first-time home buyers, those ones, they need you to hold their hand all the way through, So we never say, oh, you got the bond, so bye-bye. Any advice that you need, you can come back to us. And we use our personal phone, so at any time, you can call us.
I think that's so fantastic. It should never be a stressful situation when you're buying a home, I believe. The banks are there. They're willing to talk. You guys are there. You're willing to take them through. And it should always just be an easy experience.
Yeah. And I think a lot of people have not actually used bond originators.
That's true.
As such. And I think it's time that they actually put their trust in us.
Absolutely.
Because you get clients to say, I've got my own personal banker. But then you're not going to get all these options that we actually give to you. Because you get all these options, then you can compare. We advise you which one would actually work best for you, looking at the interest rate, the term that they give to you, the repayment. We go through the quotation with you to say, look at this, look at that. Then you can decide from that.
And I think to add to that even, we can pride ourselves in, and I'm sure you've gotten that feedback from some of the clients as well, is that we give daily feedback. So no matter what, if there's no change at the one bank, we'll still update you every day. So you can have that daily comparison. Like Tabata said, we hold your hand literally throughout the whole process.
No, I think that's so great. Okay, so now for people who want to buy in groups or partnerships, what would you advise for them to do? How does that actually work? Because I do know quite a few people who have bought whether it's land or existing homes in groups, in order to develop it further. So how does that work if they're coming to you as a group or as a partner?
Okay. There's really not much different because each and every person that will be part of the group will be assessed, right? So it's not that if it's the three of us and the two of you are okay and I'm not, then the banks will be like, no, that's great. As long as you're a group, it'll be okay, right? So they take everybody's income into account, their credit profile into account. So if one is not okay, definitely it will not work best for the application.
I see.
So it's best to check. So that's one of the things that I actually wanted to highlight. The best thing for any home buyer, start with a pre-approval so that you know each and everyone is good in terms of their credit profile. Then we know that each and everyone's affordability is there. Because remember, when you're buying in groups, like I say, your income or your affordability is taken into account, because if now Dudu fails to now pay, then Jandra should be able to take over. I should be able to take over. So it's not really that you can cover the other one. So everybody's credit profile and affordability should be in place.
That's good. We went through the pre-approval process in our previous episode. Yes. And I absolutely agree. I think that would be the best step before going and making an offer to purchase and going through the other steps with the home loans at the banks. I think sometimes maybe people would think that because I have a bad credit record and my friend has a better one, that maybe it's going to offset, is a balance somewhere. It's going to doesn't work like that. So you look at each person individually,
yes,
and their profile then counts toward what it is that they'll be able to get.
Exactly.
Yeah. Okay, guys. So you heard that. You can't go and pick up all your friends and cousins and brothers and sisters and think that somehow it might work out. All right. Yeah. And I think the most important thing also about doing the pre-approval side of things is that if in fact one individual does have maybe a little bit of an issue here and there, it can be addressed before they go to the finish line, essentially. So it gives them time to correct and get things right. And then you go through the entire process to getting the home loan ultimately.
Definitely.
Yeah. And that can take how long, for instance, if they're coming to you as a group, or does it differ on the individual's profile as well?
You mean the pre-approval? How long it will take?
Yes. If they come to you as a group or a partnership, should they expect a year or two before they can get an answer or anything like that?
No, our genius here, Jandre, made a very, very quick, fast, user-friendly app or link that individuals can use. That takes it depends on an individual. I would say I'd take 5 to 8 minutes, but then, 10 to 15 minutes, you are done. Because it just needs your basic details, and at the end, it's your basic details, your income. So that's when you can actually lie. We get a lot of people but sometimes it's not lies. It's just a typing error. Instead of 10,000, you say 100. And we say you can qualify for 5 million. But then it's a 10 to 15 minutes thing. But then remember, we're dealing with different age groups. There are still people who still say, I'd rather fill
in
the
a form.
Ill.
Yes.
But then the minute we've got everything, still, when it comes to us, 10 to 15 minutes, we should be giving you your feedback of how much you qualify for, if you qualify.
Okay.
And, if what actually is going through your ITC. Yes.
Okay.
And the great thing about that, like Tabatso mentions, we have different options besides the online version, but you'll always have a dedicated property finance consultant like Tabatso that will take you through it. And we can edit the form if you made a mistake. It's not a problem. So those things are easy to fix. I think also getting back to the question, the pre-approval part is quick and easy. It's the part afterwards, if we need to correct anything, if there's something flagged on your credit profile that's where we'll guide you. And I think on our next episode, we'll dive deeper into that.
Sure.
But yes, that will depend on each individual client's profile on how long it would take to correct it or get them ready to purchase. Yes.
Okay. So then that means that if at any point in time you decide that you want to now invest in property,
Yes.
start as early as possible.
Definitely.
Get the process going as early as possible so that it gives you enough time also to address some of the things that maybe need a little bit of addressing along the way.
100%.
Yeah.
Pre-approval doesn't cost you anything if you do that with us, and it's quick and it doesn't affect anything. So rather get that knowledge and start from there, and then watch the rest of the episodes, and then you know what to do.
Yes, we're going to get deeper into all of those things in the upcoming episodes as well, because we really want to make sure that everybody gets an opportunity to get a home loan, own a home, because essentially it adds to your future, your children's future, your future. It's an opportunity to build wealth, through property investment. So everyone should have an opportunity to own a home. And you guys make it so easy. You are able to address all the issues, and ultimately anybody can say, I'm a homeowner, and get those keys. Jingle, jingle.
We love it when it gets there.
All right. So maybe let's get to a few questions.
Perfect.
Right. Let's do a little Q&A. And this is essentially for our viewers so that perhaps we can begin to address some of the questions they may have still lingering.
Okay.
All right. So the first question, does the applicant get to see all the offers from each bank?
Yes, they do.
Okay.
So each and
don't
every
filter
day,
anything out for them.
No.
Okay.
Each and every day, you would know where your application is at. Every time you get an AIP or a final grant, we will give you all your options. We have a template that we send to our client each and every day. So if it's your first day, we'll tell you it's still with credit. Second day, if you've got any offer, it will be there. So all the banks will be in a template to your email each and every day, so that you can actually make your decision from that.
Right.
Yes.
Okay. And as Jandre said earlier, you're there to take them through step by step, detail by detail.
Yes.
So they don't have to feel alone in that process.
Yes.
Okay. That's good. Okay. Number 2. We covered the responsibility of a bond originator in our previous episode. Actually, that was our first one.
Yes.
So guys, make sure that you're caught up. If you're not caught up yet, make sure you go and watch our episodes, the previous ones. And in there, we get into depth about what a bond originator is and what it is that they can do for you and how it benefits you to actually use a bond originator when you're wanting to purchase or invest in property. And, but it's, I think we can still just get into sort of the more, in-depth type of stuff even here. So the follow-up question to that is, who negotiates with the bank?
We do. I do.
Yeah.
So that's my daily job. Like I said, each and every day, sometimes we even dream of this thing. I'm like, maybe I forgot something. So we negotiate, we motivate for the client. They don't need to do anything.
So they don't need to participate at all?
No. Okay. Unless I need more information from you. Other than that, you just sit back, relax, and then I'll do the job.
Have you ever had a client go and start negotiating with the bank, even while this process is going? All the time.
Yeah, but all the time. And I say, I'll go back to first-time home buyers. Remember now, there's information everywhere. Then there's your great-grandma or your friend that bought in 2000, right? And they're telling you, no, whatever that they're telling you is not what it is. I bought in 2000 and things were like
it was
this.
like this.
Things change each and every day. I've had one recently that went to the bank. I told her what the situation is, but they still went to the bank and told me, okay, whatever that you told me is true. I went to the bank and the consultant told me the same thing that you told me. But it's okay. That just proves that we are doing a great job and, we're not telling you lies.
Yeah. Okay. This is good. So 3rd question. And I think this one applies specifically for first-time home buyers, right? So in terms of the repayments, can an applicant choose the duration, how long they want to repay the home loan? 20 years, 30 years? Are they able to choose?
Yeah.
Okay.
I mean, your repayment starts as little as 5 years, right? But also looking at the client's age, that actually we need to take into consideration the client's age. But you have an option from 5, 10, 15, 20, 25, and 30 years. So, yeah.
And do you provide guidance here? Are you able to provide guidance?
We do.
Okay.
We do. So, I mean, the more the term, like if your term is
The longer it is.
the longer it is, then your repayment gets to be a bit lower, right? So, I mean, initially we applied for 20 years, but then if the client comes and says, let's just start with 30, then we go for that. Or if we have applied for 20, then you want 25 or 30, we do go back to the banks and ask them for that term.
Okay.
Like I said, age first. You can't be 65 and ask him for 30 years.
Why not? What if you make it?
I think,
Do you want to add to that?
yes, definitely. I think the one thing to keep in mind as well, the longer the term, the more interest you'll be paying as well.
Also, yeah.
So the final amount at the end of the 30 years is going to be much higher than it would have been if you did 20 years. So
That's true.
we'll always recommend what's within the client's affordability. If we see that they might not afford a 20-year term, we'll push it for 30. If we see that they can save on interest, we'll guide them to take a shorter term. That's it. But there's some exciting products for first-time home buyers that I think we can touch on as well.
Yeah.
Yes, definitely.
I think, Tabatso, you're the the expert
Yeah.
that deals with clients all the time. But like you said, in some of the cases where they're talking about, I bought in 2000, we didn't have cost inclusive offerings from the banks, right? So back then, if you're a first time home buyer, if you didn't save that 50 to 100,000 attorney fees, you wouldn't have been able to purchase, right? The banks now actually include costs into the bond for first-time home buyers. I don't know if you'd like to elaborate.
Yeah. So what happens is first only for first-time home buyers.
Okay.
So clients can apply up to 110%, right?
Ooh.
So each bank will look at the client's credit profile and affordability and offer an extra towards paying your attorney fees.
Oh.
So for a first-time home buyer who does not have
The capital on the
the
side.
capital to actually pay the attorney fees, they can utilize that. So it's cost inclusive. So you're applying for a bond, and on top of that, you're getting an extra percentage that you can use towards your bond and transfer fees.
Does that affect their repayment
It does.
at all? Okay.
Remember, it's an extra.
Sure.
Initially, you're applying for 100%. Now, when you're adding more on top of that, then your repayment will be affected.
Okay.
But then also excitingly, on top of that, they're also giving you a 50% discount on your bond registration fees.
Do we have first-time home buyers in the studio today? Future home buyers.
You hearing?
So did you hear that, guys?
You hear it?
That's an amazing offer. I think
It is.
it gives first-time home buyers an opportunity to actually buy, because not everybody comes with a stash of money waiting in the bank, to pay attorneys and to pay this person and that person, etc. So to actually include it then gives you an opportunity to pay it over a certain period of time, and it allows you still to have that home.
Because you can imagine if you got your 50% discount, then you've got your extra 10%, 8%, 6%. You might end up not even paying anything from your pocket. We've had clients who would pay nothing, or at least pay 2,000 from having to pay 60,000 towards your attorney fee. So it really helps.
It does.
But you just need to have a healthy credit and affordability. Yeah,
It all
that
goes back to that,
and
right?
on top of that, as a first-time home buyer, you still have an option to actually include, but also this one, it's income focused. You can also apply for first home finance. that will also help you towards your attorney fees, help you towards or pay your deposit, or just use it to just decrease your monthly repayment.
Right.
Yeah.
One thing I got to understand when I bought my first home is that attorney fees,
Yeah.
wow.
Yeah.
They can set you back. Okay. They can really set you back. And sometimes it's a surprise because you don't always get that information beforehand. Right. And especially if you're not working with a bond originator at the beginning,
That's true.
and you're going about it on your own, then there's certain things you're just not going to be able to get information on, and you only find out at the later stage, and then you realize, wow.
Yeah.
It's a lot.
It's true. I mean, most of the real estate agents or property practitioners that we work with are very well educated in this sense. They understand that it's important to notify the buyer that there are additional costs. But we have a lot of property practitioners that would go out of their way to tell the buyer when they approach them, have you done a pre-approval?
Right.
Have you spoken to someone wherever you've done it? I can give you GreenDoor's number. Go and do it with them. And in that process is where we also explain to them the options of the cost inclusive as a first-time home buyer, and also make them aware of the costs that are involved. Just to prepare. You don't want to get to that point, sign all the documents, and then
boom.
Oops.
Surprise. Big surprise at the end.
Yeah. And then all parties involved, get affected at that point. So, yes.
Now, we spoke a little bit on the previous episode about, the difference between the two clients, one that is pre-approved and the other one that is not.
Yes.
I'll give an example. Recently, there's a home that's in the market currently that we are selling. And as you know, the interest rates weren't necessarily bringing a lot of buyers on the table. Yeah. So the house stayed in the market for a long time, for a long, long time. And of course, as a seller, you start getting a little bit antsy, getting a little bit worried, because obviously you want your home to get off the market as quickly as possible. And now, as things are turning around and you're having all these buyers coming on board, the home seller now is asking those questions. Are they pre-approved? Are they pre-approved? Because we want this process to go as quickly as possible.
True.
That's true. Yes. Yeah. Sellers are also getting more educated in that sense, knowing who they are, allowing to come view their properties. It's a matter of that as well. If you've got a popular property or something that might sell quick, the agents are going to prioritize the ones that have already done a pre-approval.
That's right. Yeah. So especially if that's what the seller wants, right?
It.
The seller wants somebody that they can work with quickly, get this house off the market. It's been in the market for too long.
And get serious buyers in,
That's right. Yeah.
Not just someone wanting to come and have a quick view at an open house.
And it also helps us. I mean, when you know who you're working with, the type of client that you have, the process is quicker. Within your 3 to 5 days, we've got all the offers, then you can make a decision from that.
Right. All right. So let's get into some of our key takeaways for today.
Awesome.
Perhaps you have a few. I have a few for myself. And my ones are to know your options and understand your profile. So understand what it is that, you can actually afford, what your credit score is. Know if you're going in as a group or in a partnership, what each other's profile is as well. And that will essentially then make the process a lot easier for you. So I think that for me is important. Yes. So do your homework behind the scenes.
Yes. That's it.
Yeah. And then the different loan types, of course. Our specialist here took us through all the different loan types. That's it. I think that's also something that most home buyers probably aren't aware of, that there are options. South Africa does offer quite a bit in terms of that. And we're lucky in that sense.
Yes. Yeah. So I think from my side as well, same thing, almost what you said, know the worth. So get that pre-approval done. That's the very first step. And you're going to be hearing that a lot throughout these next few episodes. But it is, you need to know what you can afford, right? So start with the pre-approval. Speak to an expert. There's no need for you to go and study up all the different home loan offerings.
Don't Google everything by yourself. No, Google does help, but not all the time. You don't need to.
Even ChatGPT will take you a long route. So speak to the experts, let them guide you. Give them as much info as possible. I think that's key as well. Although we already know what questions to ask to know what would qualify you for certain products.
Sure.
But yes, be open about your finances, and I think that's the key takeouts for me.
And for you, Debatson?
I mean, I gave you all the info.
You gave us everything. I think interest rates are critical to get to understand. Yeah.
But for me, I think I'll also repeat what you guys said. For me, and even with the agents that we work with, I always encourage them. If I don't know the kind of clients that I'm working with, then I can't be able to assist them. I mean, a lot of agents, some of them, not all of them, but rely on the information that they get from the client. I mean, a client will tell you, I do not have areas in my profile. And then they don't do a pre-approval. Then when we get to the application process, then there's a decline. But if we know your profile, we can advise each other. Pay up your accounts, wait for this certain period of time for your score to pick up. We'll apply probably after 3 to 6 months. We know definitely that you'll definitely win with what we are saying. Then have a healthy profile so that the banks can give you the best interest rate. I mean, a lot of people, when they come, they're expecting definitely minus prime. Everybody wants that.
Right.
But then not everybody can get
that.
Because you really, really need to have a very pretty, proper,
squeaky
clean.
And we're not
profile.
Not everybody is.
No.
Yeah, no, not everybody.
Some stats in
Exactly. So if you keep it clean and healthy, definitely the bank will give you what you want. They'll actually fight for you. We've got in the office, we've got your 1 day AIPs or your final grant. A good client will get an approval in principle and a final grant. Same day.
Wow. Amazing.
That's in 1 day. But it's because you have affordability in place and you've got a healthy profile.
Right.
So those two are key in getting whatever that you want from the banks.
But of course, you can get them to that.
That's it. I was just about to say.
Right.
If you don't have those two things, those two key ingredients to get the perfect result, don't worry.
No stress.
That's it. Still come to us. We're here for guidance. Start with the pre-approval and we'll take it step by step.
Yeah.
Yes.
That's perfect. I think that's good. Had I been a better informed investor at the beginning,
yes,
I think I would have done everything that you're telling me right now today. But that's why we're here, right? That's why the podcast is here.
Yeah.
That's why we're offering all of this information so that whoever wishes to invest in the future can go back to previous episodes and just sort of study the entire process from start to finish. 100%. And then you know that GreenDoor is always going to be there for you along the way. Yeah.
Perfect.
Oh,
rely on us.
Call us. Friend, hold you by the hand. Okay, great, guys. So that's it for this episode. The next episode, we're going to be unpacking how you can increase your approval chances at the bank. That one, I think.
Yeah, especially if you've got some issues on the credit side.
Right.
Or questions or thoughts. That would be a good one to do.
Yes, everybody has a little bit of debt here and there.
Yeah. That's it.
Some more than others.
Yeah.
And then that can also affect your application process.
100%. Yes.
But it can be corrected. And I think that is what is important. So we're going to get into that in the next episode. We're going to go deep diving into that so that we can make sure that you have the perfect profile and we can guarantee you an approval at one of the lending institutions in South Africa.
That's it.
I love it. I love that. So guys, drop a comment down below if you would like us to unpack any of the products that Dabatso shared with you today. And we can do that even maybe in a next episode, if we have to. Yeah. We can come in, go into a deep dive on any of the products. If you guys have questions, also please put those down in the comment section and we'll make sure to answer you in follow-up episodes as well.
Perfect.
Yeah.
And don't forget to... Yeah.
Go ahead. No, please.
This is your line.
No.
Don't forget to like and subscribe, guys.
subscribe to our channel and hit the notification bell,
That's
please.
it. And we'll see you on episode 4, right?
Yes, episode 4 is coming up, guys. Make sure that you do not miss it. This series is for you. We're sharing this to empower you. Make sure that you become a home buyer or a home investor. South Africa, everybody needs to own a home. That's it.
That's it.
All right. Thank you so much. We'll see you in our next episode. Bye.
Bye-bye.